The public equity market seems to be ending the quarter on a relatively strong note. I wanted to take a few minutes to talk about some of the positive factors that are impacting equities outside of AI. And one is the GDP report that we saw last week, which came in better than expected. So it looked like the economy was expanding at a higher rate than people expected. If you have been following the job market, job creation in the US has been slower than expected, and unemployment has been slightly rising, which basically justified why the Federal Reserve, cut interest rates a few weeks ago. As a result, you would expect the GDP report to be in line or slightly weaker than expected, and instead we saw a reacceleration. The equity market sold off a bit at the time, but we've seen it really strengthen in the days since. So what does that mean? And one of the most important thing is the odds of a recession have gone down quite a bit. So if you look at today, the odds of a recession are around 7%. And again, this is what people are expecting. If you look at where we were coming in the beginning of the year, the odds of a recession were around 18%. And then if you go to the period where we're having all the concerns regarding the tariffs, and there was really the uncertainty about what tariff rates could be, the odds had increased to 65%. So it's possible we could be in an environment where the economy is actually doing relatively well, and we do get interest rates coming down, but at a much slower rate than what the market expects. If that is the case, the equities could do well in general. It does mean that kind of the rotation into value could transpire further down the road than what people had originally expected. There are still a lot of risks out there. Watching the bond market, I think, is critical. Number two, that is equally important, is really watching what's going on in the employment data. I think that those trends are going to be very important. And a third near-term risk that we have is what happens with the federal government. Is the federal government going to close as a result of an impasse between Democrats and Republicans as it relates to federal spending? Today, the top four congressional leaders are meeting with Trump. This is the first in-person meeting that they have had, and the deadline is tomorrow. So I think we're going to get a lot of data or a lot of commentary today and tomorrow regarding what happens. And the biggest impasse between the two parties really is regarding healthcare subsidies and a discussion around Medicaid and Medicare in particular. So stay tuned for what happens there. And again, I think we're going to get a lot of commentary in the next 48 hours. If we do go into a shutdown, we've had shutdowns many times in the last decade, in particular with the government. The question is how long we're going to remain in shutdown, and that the market never likes uncertainty, and we could see a reaction. Thank you.